Yes guys, welcome back to my YouTube channel. So 2021, I spoke about we having to invest our monies. But what are the things that you need to know before you invest? This video will tell you exactly what you need to know before you invest. But before I go into the video, if you are new here, don't forget to click on the subscribe button and don't forget to turn on the notifications so you don't miss anything that I post on this channel. So for most people, whenever I interact with them and I talk about investment, the first question on their mind is how much returns am I making? How much money will I be getting from this investment I'm doing? That's okay, but investment should just go beyond the returns you're making, because trust me, if you just focus on returns, you might make the wrong investment decisions, and we don't want that to happen to our finances. So this video will show you questions you need to ask yourself before you start thinking of investment. So let's go straight into the video. Now, for most people, it's about asking the whys. Why am I investing? What is my goals and what's my objectives for investment? So that's the first question you need to ask yourself. Why am I investing? Is it, for example, for my retirement property that I want to have? Is it for travel? Is it for my children's education? So defining your goals and objectives will shape where you should invest. Let's give an example. Let's say you're looking at, let's say, planning for your children's education, or let's say retirement, which probably is in the long-term future. What do? It means that you should probably consider something which is long-term in nature, or the investment you should do should probably be long-term. Let's say I'll look at, let's say, a fixed income unit trust. I'll look at a bond. I'll look at a real estate investment trust. Probably even consider shares or stocks, because these are all long-term. But if, for example, I'm looking at saving some monies for, let's say, school fees that's due in 6 months, I wouldn't consider stocks. Why? Because they are volatile, and in the short term, it might not help me achieve the goals that I want to do. So the whole aim is to know why you are investing, then feeding it into what will help you achieve that goal. Now, the second thing that you need to know, or the second question that you need to ask yourself before you invest is, how much money am I willing to lose? What is my risk appetite? So it's interesting to know that. Ask yourself, if, for example, I invest in this investment A and it loses 20% of its value, or there's a dip, what would I do? Will I run to withdraw my money, or would I probably add more money, or would I just stay cool, stay calm, and see what the next thing or the next investment would be like? So asking yourself what your risk appetite or your risk tolerance level is will help you determine what you should invest in. For example, you don't want any risk at all. You are risk averse. Then you should probably look at, let's say, a treasury bill or a government bond, because in finance, you say these securities are probably risk-free, as in the risk of default by the government is relatively low. Now, there are categories of the risk tolerance level, and there are 4 categories. So on the bottom is the risk averse, in the people that don't want any form of risk. Then we have risk neutral people. So they appreciate the level of risk, like some people like that. Then we have the more tolerant people. So these people, they appreciate risk, they are willing to take on some risk. Then there's the aggressive risk takers. Those people who are eager, looking for some high risk investment to pursue and get some returns. But for one thing I've realized for most people is that they think that the higher the risk, the higher the return. In finance, actually, the higher the risk, the higher the expected return. And most people forget to use the term expected. So all they know is if the risk is high, that means I'm getting a good return. No, it might fail you. So again, if, for example, you see your friend who is probably an aggressive risk taker, investing in probably, let's say, bitcoins, or investing, let's say, or doing forex trading, and you think a person is making great returns, probably a person is an aggressive risk taker. But maybe you're a risk averse person, but because you are focusing on the returns, you might want to probably jump into the forex trading or the cryptocurrencies that the person is investing in it. And probably because of its volatile nature, after maybe like a week or two, you see that there's a dip in the money or in the value of your investment. Now you have big trouble for you. So in determining your risk tolerance levels, for me, 2 things should help you shape that, or help you categorize where you should fall in your risk tolerance level. Now, the first thing is your health, and number 2 is your wealth. So if in terms of your health, probably you're not too well or too strong, I would probably recommend you looking at probably some less risk investment. Because if, trust me, to invest in, let's say, something really risky, and 3 days time or a month's time you realize that the value of your investment has significantly dropped, probably might even lead you to an early grave. So your health should probably shape your risk tolerance level. And secondly, your wealth. I mean, all things being equal, if you have a lot of money, you can afford to probably, let's say, in quote, gamble with some of the high risk investments. But if you are probably not too well doing, or probably you don't have so much money, it's important to play in the safe space. Because if, for example, someone has 100,000 Ghana cedis, they can probably afford to play with 10,000 Ghana cedis. But if you have 1,000 cedis, I'm not sure you are in a place to probably play with that amount of money. So it's important that our health and our wealth determines our risk tolerance level. Think about it, and hopefully it can help you shape where you and what you actually invest in. And the final thing that I want you to think about, the question I want you to think about is, what is the investment? What have I taken time to understand this investment? And that's what we call due diligence. You need to ask yourself the right question. Do I understand this investment? How is it being run? What are the fundamentals? Ask yourself, okay, even beyond that, even beyond the investment, who am I investing with? Which company am I investing with? Are they licensed by the SEC? I mean, it interests you that if you go beyond and you ask these questions, you might see that there's something probably wrong with this thing. And one thing I've realized is that if it's too good to be true, then it's probably not true. Don't chase high returns all the times. Focus on safety, and you can do this if you know if you do your proper due diligence. Ask yourself the right questions, and hopefully you don't fall to this get rich quick schemes where they promise you high returns and before you realize your money is gone. Now, I'll leave here a video here of the options you can probably consider if you want to invest. So guys, these are the 3 things that I wanted to share with you, or the 3 questions you need to ask yourself before you invest. Number 1, my objectives, my goals. Number 2, what's my risk tolerance level? And finally, what is the investment about? My due diligence. Do all of these things and hopefully you make the right investment choices for 2021. I hope you enjoyed the video. If you are new here, don't forget to click on the subscribe button and turn on notifications so you don't miss anything that I post on this channel. See you soon. Vamos.